Hello and welcome to Pro Trader Strategies Market Commentary for Friday, September the 14th. My name is Eric Wilkinson, and some of you may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal for my commentary on everything from economic to geopolitical and market analysis. Please keep in mind that everything that we talk about in these market commentaries is not a solicitation to buy or sell any of these securities or strategies. At the end of the day, I'm here to teach you some different strategies you can then implement into your portfolios, but please do that in your own way. Also, remember the past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with some economic data across the pond. We got trade balance came in at 12.6 billion. It was expected to be 19.3 billion, so lower than expected there, not so good. Also, we got out of Great Britain. Never mind about Great Britain. Let's talk about the U.S. We got core retail sales came in at at 0.3%, which was lower than the expected 0.5%, albeit they revised last month's number up from, 0.6 to 0.9%. So 3% revision there almost counteracts the number that came out today. So that is a wash in a sense. And then we got retail sales coming in at 0.1%, expected to be 0.4%, so lower than expected there. Headline number looks pretty bearish for the overall economy, but then we got another revision to last month's number up from 0.5 to 0.7. So close to being a wash there as well, still negative though, don't get me wrong. And then importer prices came in at negative 0.6, expected to be a negative 0.2. So we're not seeing that inflation or the tariffs really start to show up here. Also, capacity utilization came in at 78.1, expected to be 78.9, and that being lower than expected means they're not churning out as much as one would expect. They also revised last month's number down from 78.1 to 77.9, so a slight revision down to the downside there. But capacity utilization slowing down on that. We'll have to keep an eye on that. Also, industrial production, though, came out at 0.4%, expected to be 0.3%, and last month's number revised up from 0.1% to 0.4%. So industrial production is cranking out, even though capacity utilization is pulling back a little bit. That's actually a good thing. It could just be streamlining the process, Lean Six Sigma, and therefore capacity utilization can go down while production increases. And that's the way I'm kind of looking at that one right now until further data may change my mind. All right, University of Michigan consumer sentiment back above 100 for the first time in a while. It was expected to be 96.7. They also revised last month's number up from 95.3 to 96.2. So a nice revision to the upside. Business inventories did increase a little bit to 0.6%, expected to be 0.5%. All that has to do with whether or not they believe that the future is bright for future sales. All right, so that looks pretty decent, right? Not bad. We don't want to necessarily see inventories really rise unless they expect to sell those, and that's what I'm kind of looking at with industrial production cranking and stuff like that. Retail sales not doing so good. It's a bit of a toss-up right now. I'm sure they're thinking the same things. All right, crude oil. Let's talk about the markets right now. Crude oil, $68.82 as we speak, right below the 50 Fibonacci for the 3-year 50 Fibonacci. Not the extensions necessarily, but we're right there close to where the point of control is, where I've talked about this. It's going to want to migrate there. That's where the most time and volume has been spent. That's where price has been accepted. That's where people find value at this point, and it's by a long shot, really. So that being said, it's going to act as a strong magnet for crude oil. Not a whole lot to see here, up 20 cents on the day, but tested that 50 Fibonacci again today and failed. Gold futures coming off, but still above the 1200 psychological level that we've been talking about. It is at this point below the 9-day moving average. That is bearish for the short term. Long term, it's all obviously been bearish with it below the 200-day and the 50-day, the 50-day crossing over right here. All of that stuff very bearish for gold futures. They are holding their head above water at this point. Bitcoin starting to move a little bit higher today by about $40, which is really not much of a move at all. This is where people, I think, are trying to scoop a little bit for a bit of a pop. You know, now that the news wires have kind of gone away from the crypto and into pot stocks, I think that that's going to also hurt the cryptocurrency, especially Bitcoin. All right, bonds are coming off a bit today, almost down a point, a few ticks away from it. At the end of the day, we had headline numbers that weren't very good. We saw the equities come off on that a little bit, but I think that they're starting to dig into those numbers, look at some of the revisions, and realizing that those revisions kind of make up for some of the miss on this headline number. So bonds starting to roll over a little bit here. Not a whole lot of room to the downside to go, especially with some of these economic data points. I think that the Fed is going to be a little bit cautious about raising interest rates when we start seeing these numbers maybe not beat as much as we would expect, or even just not even beat, to be quite honest. So bonds are coming off, but I think it's maybe a little overdone to the downside. VIX holding on to the 12s, but not a whole lot of hope for that, with the Dow Jones moving higher today, up 53 points, and it's beaten this high here. So that's a pretty significant number. That's continuation of an upward trend here in the equities, at least for the Dow Jones. Similar situation showing up in the NASDAQ. It hasn't gotten near its highs either, but at the end of the day, we are starting to move up and away, and I think that 76.97, and I believe that might have even been done overnight, needs to be at least traded during the intraday session. E-mini S&P is up also on the day, moving higher. I'm glad I kept my SPY trade. It's still not a great trade, but it is coming back. I need a bit more of a rally on those long calls I have on, which is the, the 295 calls. So I need a bit of a move higher for SPY in order for those to start really coming back. All right, E-mini S&Ps. This is what I was talking about. Overnight inventory getting long on the economic data points. We did get a bit of a sell-off coming into the day session. Could be flushing out all the longs as well, because we did have a kind of a gap higher here on the open. All of that got flushed out. We started looking at the revisions, things of that nature, digging into that data points. That's when I believe the catalyst was to start rallying. So I think equities have more room to the upside to move. Bonds, not a whole lot of room to the downside, but I think it's going to be a flight to quality where people pull out of bonds, try and throw it into the stock market. We could see that downward pressure in gold as well, as it's a flight to quality. You know, not a whole lot of worries here. Therefore, throwing money at the stock market, you're going to pull out of some of those other asset classes. So equities, I think, are going to continue to move higher. Now let's talk about a trade that I put on today with regards to my webinar that I talked about with the long calls. Went through all of my rules in and around that volatility, all of that stuff in minutia, so that you guys can really see where these numbers affect our pricing and why I have my rules as to when you buy and when you sell options. Okay. Having said that, after all of that, we went through a bunch of different ticker symbols to find a good one. This is one of the ones we came up with, was applied material. Looks like it's found a bottom here. It's had a pretty bearish run. We've got this bottom doji here. You got 3 of them. Usually that's a nice sign of a turnaround. Today, when we got confirmation, I decided to pull the trigger on this, and I went into the November and I bought the 41 calls because we have really low implied volatility. I'm bullish in this. So I bought the 41 calls following my rules that I laid out for you guys in this webinar. So check that out. And expecting it to move higher. I talk about my exits and all that stuff, what I'm planning on. If it does break, one of the things we talked about is, when do you get out of these when they're losers? If it breaks below 70 or 37.39, this low here, I am out. I'm pulling the ripcord on it, because then it's a broken setup. I'm doing this trade based on these 3 dojis as a setup for a bullish move. So if it breaks that bullish move, then I'm going to be out of it relatively quickly, so I have a quick trigger finger on it. All right, let's talk about Apple. That was another trade that I was talking about taking off yesterday. If you guys remember, in this Apple app on the October, I sold the 200 puts in there, high implied volatility. We're getting that volatility coming out, which is helping me, but the directional move is hurting me. So they're kind of counterbalancing each other. I talked about this yesterday in the daily market commentaries, when and where you want these things to set up. Well, this is working out for me, actually. Directional move against me because I'm short puts. I don't want that. But because we're seeing this volatility come out like we would expect when volatility is overstated, like I talked about in this video yesterday, my webinar, it's helping me out. So I'm not too worried about it. I'm still working a 50-cent bid in there. It's trading around 65 or so, something like that with that directional move. You know, it's only like 3 pennies against me with a $1.50 down move in $1.75 down move in Apple. So I've gotten the directional move against me. That hurts, but because that volatility is coming out, it's counteracting it. And I talked about how all that stuff sets up in that video. So check it out at protraderstrategies.com because this is a clinic going on in Apple right now. Hopefully it doesn't go against me now that I stated that. But anyway, check it out, protraderstrategies.com. And if you can't take that, take it easy.